housing really matters. Our homes are really important, and making better use of the stock of housing we already have would be a big win, not just for economic growth, but actually just for the happiness of people in the country. I think it's one element of it. The other thing is just that when you take a step back, the system is just really horribly unfair, right? There are just lots of the parts of the system where we always point to the losers. You would get a losers in the reform. What about the people who are losing from the current system, the people who are paying much higher tax bills than you can reasonably justify, not for any good reason, but because we couldn't be bothered to update property values or make it a sensible system? Hello and welcome to the IFS Zooms In. I'm Helen Miller, Director of the Institute for Fiscal Studies. Today we're talking about taxes that are closer to home. We're talking about how to fix taxes on property. And how we think about taxing homes is actually particularly interesting because homes have multiple features. On the one hand, they are obviously the things that we live in. They provide us with shelter and safety. And in that sense, you can think of taxing houses in a similar way to how we tax other things that we buy, like fridges or dresses. But at the same time, properties are also assets whose value can rise and fall. And for many of us, a huge share of our savings are tied up in our homes. For that reason, home ownership is a form of savings that should be taxed consistently with other types of savings. And of course, finally, houses also sit on land, and often land that is particularly valuable. And these multiple features of homes means that it can be tricky to get the taxation of housing right, which is perhaps why, against some very stiff competition, this is the most broken part of the tax system. So today, in the third episode of our mini-series on tax, we're going to unpack the taxation of property and sketch out how we could rebuild more sensible taxes. We'll look at council tax and stamp duty, at business rates on non-residential properties, and at why landlords, and therefore renters, are getting a rough deal from the current system. To do that, I'm once again joined by my two colleagues, Stuart Adam and Ben Zaranko. Stuart has been working on the design of tax and benefits for over 2 decades now and has written very, very many things about all parts of the tax system, but including housing and including being an editor of the Merleys Review, which comes in 2 beefy books and looks at the kind of comprehensively at the design of the tax system. I think housing taxation is actually Stuart's favourite bit of tax design, so I think he's looking forward to today. And we're joined by Ben, whose job is importantly to keep us out of the weeds and help all of you listening understand how we should fix taxes. So let's start with council tax and stamp duty, which are the 2 taxes that people will be most familiar with.
And because I know the least about taxes in this room, I'll do some asking of the questions, shall I? So you can feed in, Helen. Okay, so council tax, what is it?
Council tax is a property tax. It's charged on housing in Britain. People pay every year council tax to their council, their local authority, according to some measure of the value of their property.
Who pays it? Is it paid by the person who lives in the house or the person who owns the house?
The bill goes to whoever's living in the property.
Okay, so the person who lives in the property gets the bill and it's paid to the local council, and the local council sets the rates of council tax as distinct from things like income tax, which are set at a much higher level of government.
Yeah, so the overall level of council tax is set by individual councils, although subject to some restrictions. So in England, central government says if councils want to raise council tax by more than a certain percentage, they have to hold a local referendum, which councils have generally been reluctant to do.
Well, go to the local population and say, please vote for, allow us to raise your taxes by even more. And for some reason, politicians are reluctant to do that.
Yeah. And also it's central government that sets the structure of council tax. So properties are placed into bands, and properties in higher bands are subject to higher levels of council tax, and putting properties into bands and what the relative rates are for different bands is something that's decided by central government or devolved governments in Scotland and Wales, not by local councils.
Okay, so the central government says, just for simplicity, this band will pay twice the council tax of that band, but the local council gets to shift that up and down in order to raise the amount they want to spend on local things.
Exactly.
Okay. And how are those bands determined? I assume it's based on some sort of very high quality, up-to-date assessment of property values. Is that right?
Well, naturally, with the UK tax system, you would expect everything to be totally rational, and of course it is. Properties are put into bands based on their value, but based on their value as it was in 1991. even as it happens if the property hadn't been built in 1991, they go out back and figure out what band it would have been in if it had been around in 1991.
And can we just pause and this is absolutely absurd, right? If this isn't obviously absurd to you listening, it's absolutely absurd that we are basing our tax on values from 1991, so like 34 years ago, including for houses that weren't even built back then.
So if you build a new build block of flats or a new build house, someone gets sent around with the job of have a guess at what this would have been worth if it was built in 1991.
Absolutely.
And like, oh, they would have loved Ring doorbells in 1991. Or imagine what they would have thought this big telly was like. Okay, that's obviously bizarre. Fine. Are there any other critical aspects of council tax you want to highlight now before we move on to the other big one, stamp duty?
So one thing I've mentioned in passing is the fact that council tax is devolved. So it is based on 1991 values in England and Scotland. Wales did do a revaluation in 2005. It's legislated to do another one in a couple of years' time, which shows it is possible to
big points to
update
Wales.
council tax valuations.
An argument
absolutely.
for devolution.
Northern Ireland's got a slightly different system, domestic rates, which older listeners may remember we used to have in the rest of Britain before the poll tax came in 1990 or 89 in Scotland, where properties aren't in bands at all. The tax is just levied on as a percentage of the exact value, estimated exact value of the property, at least up to a cap. And again, in Northern Ireland, they did do a revaluation, and it's based on at least 2005 valuations, which is not quite up to date, but still a lot better than England and Scotland have managed.
So there's clearly some issues there. Let's park that for a moment. Let's move to the other one that people might be most familiar with. So stamp duty. I think stamp duty land tax we mean here. Helen, give us the couple of sentence summary of that.
Oh, the thing you really need to know is that stamp duty is awful. So stamp duty is a tax that you have to pay when you want to buy a house. There is a transactions tax called stamp duty. So you have to pay a tax based on the value of the property you're buying. And in broadly, I mean, there are different rates, but broadly, the more expensive the house you're buying, the more stamp duty you pay.
Okay. And low value properties don't pay stamp duty. So it's only above a certain level, stamp duty kicks in, and then it gets really quite high as you start buying and selling very expensive properties. Is that
Exactly.
right? So stamp duty, is that also devolved?
Yeah, and it is slightly different in Scotland and in Wales than it is in England and Northern Ireland. In particular, as with actually quite a lot of devolved taxes, Scotland has reduced stamp duty for lower value properties and increased it for higher value properties. So it's more progressive in Scotland than it is in England, but the basic structure is very similar.
Okay, these are two big property taxes. How much do we raise from council tax, ballpark?
About £50 billion, which is a bit under 5% of all total tax revenue.
Okay, so council tax is about 50 billion. That's collected by local authorities and used to pay for particularly adult social care services, but also other local services. How much do we raise from stamp duty?
Stamp duty raises about £15 billion. 1.5. I should say that's not just stamp duty on housing, that's also stamp duty on commercial property. That is forecast to rise quite quickly to more like, I think, over £25 billion by the end of the decade.
Okay, so there's a sizable amount of revenue coming in here. And has stamp duty been around a while? It's one of our longer running taxes, am I right in saying?
Yeah, stamp duty's been around forever, pretty much.
And I assume is that because one reason why it's attractive to governments, I assume, is because you know how much the house or the property is worth because it's just changed hands. And that's a natural point at which you can relatively easily levy a tax. Is that the idea?
Yeah, that's the one attraction of stamp duty relative to something like council tax is that because you're levying it at the point of transaction, you know what the value is and you know that there's money changing hands, so there is a cash flow available to pay the tax. That's one difficulty with council tax is that some people have to pay the bill even if they don't necessarily have a lot of cash floating around.
But just on that stamp duty point, you can absolutely see why, hundreds of years ago, trying to tax a transaction was a relatively easy thing to do because you could observe it happening, and it was much harder to try to value property stocks. I think that's a rubbish excuse for stamp duty nowadays, frankly. I think now we have such great technologies in comparison to what we had a couple of years, 100 years ago, that I don't think there's any room for stamp duty in the modern tax system on that basis, right? We can measure flows of all sorts of things. We can measure property values and all sorts of other stuff. So if that's the best we've got in favour of stamp duty, I think that's a rubbish reason to have it.
Well, I'll come back because I know that it's and I know that we're going to give stamp duty a real kicking, but I thought I'd try and at least give it a fair hearing first, right? I know we used to have a window tax, and no one's suggesting we should bring out that tax based on how many windows you have. But okay, so we'll come back to why we hate stamp duty so much, because I think that is going to keep cropping up. But maybe first, let's talk about council tax and the problems with it. So one thing you've already talked about is how it's bizarre that it's based on what the property was worth in 1991. We wouldn't tax someone based on what their income was in 1991 or how much they spent in 1991 or how much their shopping basket would have been worth in 1991. And it feels a bit bizarre to do it for housing. So there's that. Anything else? You mentioned that it goes up to more valuable properties pay more, but is that done in a rational, sensible way?
Well, so council tax is much less than proportional to property value. So the tax bill for high value properties is a much smaller percentage of value than that for low value properties, which is the technical definition of being regressive.
So just put that in slightly simpler terms. The precise numbers here won't be right. So Stuart can give me some actual numbers in a moment. But the point is that a house might be worth 10 or 20 times as much as another house, but its council tax bill won't be 10 or 20 times as high. It might only be twice as high or something like that. And that's why you get these stories about Buckingham Palace facing the same council tax bill as a relatively ordinary family house somewhere else in the country.
So council tax rises much less than in proportion to property value. So in England, properties in the top band, band H, face council tax 3 times as much as those in the bottom band, band A, in the same local authority, in the same council area, despite having a value in 1991 that was at least 8 times higher and often, usually much more than 8 times higher. So more than 8 times as valuable, but only paying 3 times as much tax.
And it's perhaps worth saying that we don't necessarily need every part of the tax system to be progressive, and we don't even need property taxes to be progressive, meaning that higher value houses pay more as a share. But it's particularly hard to justify why you want a regressive property tax, why we want this feature where people living in higher value properties pay a smaller share of their property value than those living in lower value properties.
And council tax is the only part of the tax system where we create a tax that is deliberately, by design, regressive with respect to what it is that you're taxing. We don't do that for any other tax. And it's hard to see why you would want the tax on property to be regressive when none of the other taxes.
Is one argument that because
collection.
It's notionally paying for local services and the cost of providing bins and libraries and whatever and street cleaning and all those things to a big house doesn't go up every day. If just because a house is slightly more valuable, doesn't cost twice as much to take the bins away.
No, so it is sometimes argued that council tax is really a charge for local services rather than a property tax. You could do it as a charge for local services, but I don't really buy it that that's what council tax is. If you really wanted a tax for local services, it probably wouldn't be related to your property value at all. And actually what we'd end up doing is charging more to households with lots of children and lots of old people and lots of vulnerable and infirm people, because those are the ones that use social care and other services that councils provide. What we really have is a property tax that goes to councils and helps to fund local services, but just in the same way that income tax and VAT and corporation tax go to central government and help fund central government public services.
Okay, I know there's one other aspect of council tax that I've come over to your desk before, Stuart, intending to have a 5-minute conversation and left several hours later wearily and with my brain frazzled. So go on, let's not have the 3-hour version. Let's have the shorter version of what's wrong with the single person discount.
Maybe what is it first?
Okay, what is the single person discount and why does it get you so angry?
So the single person discount is a 25% reduction in council tax if you are the only adult living in the property. Other than students and some others who are discounted for council tax purposes. But essentially, if there's one adult in the household, you pay 25% less. Now, whether you want to redistribute from bigger households to one adult households, I think is an open question. Whether you want to do it through council tax feels a little bit strange, but you could do it. The problem I have with the single person discount is that because it's done as a 25% discount, that means that you get a bigger discount if you live in a more valuable, higher band property. And that provides an incentive for single adult households to live in bigger properties than they otherwise would, and conversely for bigger households to live in less valuable properties than they otherwise would. And given that we've got, a real housing shortage in parts of the UK, to encourage people to live in houses that are too big for them or too small for them seems crazy. And it's actually something that would be relatively straightforward to fix by saying, if we're going to have this discount, just make it a discount of, £100 or £300 or, X percent of the rate for a Band D property, say, irrespective of the band that the actual property you live in is in. So you don't get a bigger discount for living in a more valuable property.
Okay. So the sorts of people might be, for example, my grandma lives alone in a bungalow in North Shields. She probably isn't listening to this realistically. And she will presumably get the single person discount, and it sort of provides her with a disincentive to downsize, and other older people maybe living in big houses, it gives them a disincentive to downsize. That means we use our housing stock less efficiently. But on the other hand, if you were a government, hiking up the council tax bills for single grannies might be something that your political advisors might warn you against. Do you think that's why it's lasted so long?
Well, but I'll say that might be a reason not to get rid of single-person discount completely, but you could have a discount that is as generous as our current one is on average, but no longer gives a bigger discount to those in more valuable
property. Make it
property.
A cash sum rather than a percentage of the value of property.
Exactly, so if you made it a fixed amount rather than a percentage of the bill, that would actually be more help to grannies living in less valuable properties who may be struggling more, and just not as much help to those grannies living in the most valuable properties.
All right, let's park this, because there's a key point here about how we use housing and who lives in which houses that I think is going to crop up again. And I think there's also going to be, what about the old people who haven't got much cash thing? It's going to crop up again. So what's wrong with council tax? It's based on property values in 1991. It's regressive in a way that no other bit of the tax system is. And there's this peculiarity of how we design the discount for single people. Okay, now stamp duty. Helen, I've got in your notes here, you want to give stamp duty a good kicking. So this is your opportunity to do that.
I think every opportunity people should give stamp duty a good kicking, because it's just so awful. It's just gumming up the housing market. You and I, Ben, could live in houses that are equivalently valued in different parts of the country and want to both move, and we're discouraged from doing so because there's this transactions tax. There's no good reason to do that. It's also the case that houses that are transacted more often get higher taxes. Why do you want to do that? You don't.
Can you spell out just why economists think transaction taxes in general aren't a good thing?
I think one thing is that, in general, why do you want fewer transactions? What benefit do you get from having fewer transactions? Unless you think there's something bad about transactions, we could get into technical arguments about whether you want them to slow transactions down. The issue is, why do you want to stop transactions? In general, usually you don't. And it doesn't do anything good for you. If you want to tax higher value houses or richer people or whatever else you want to tax, there's just more straightforward ways to doing it. Taxing houses that transact more frequently, or people that need to move more frequently because they move for their jobs or their families, or just because it make them happier. Why is that a subset of the population that you want to put heavier taxes on? I just think it's not.
So it relates to this problem earlier about who lives in what houses, right? And you might have some people, maybe their kids have left home, maybe they live in a big family house that they no longer really need all that space, but the tax system explicitly discourages them from moving down to something smaller by the seaside or in the city or wherever it is they might want to settle to. And that means that that's a family house that a young family can't move into, and maybe they have fewer kids than they otherwise would have. And all this stuff adds up into a less happy population.
It also means that moving house can become, and I say this from experience, moving house can become kind of a risky thing to do. So imagine you have a family, your space requirement is growing, you need more space, and you want to move somewhere, but you're not entirely sure where you want to move or where you might be happy. If you move somewhere and you put often very large sums, can be tens of thousands of pounds into stamp duty, and you end up not liking that location, or your job changes and you need to move, you can kind of be stuck because you have to save up all that money again to be able to move again to pay the stamp duty. So it ends up meaning that people have to wait until they're really sure that they've got the right property. And then if they haven't got the right property, you're kind of punished and penalised because then you can't move again because the tax has locked you into somewhere that you really don't need to be. So again, what is that doing for us? Why do we want to punish people who need to move more house? It's just a silly thing to be doing with the tax system.
I suppose the government raises 15 billion, soon to be 25 billion, and would have to find it from somewhere else. There's one reason why they might keep it. But there's a point here I want to draw out a bit, which is this is a particular problem in London and the South East because that's where property values are highest and that's where stamp duty bills are therefore highest. Now, one way to think about that is there's lots of high-paying, high-performing companies in London and the South East, and people might want to move to be able to take advantage of those, and stamp duty discourages them from doing so. Inefficient allocation of housing might be bad for growth. On the other hand, I have some sympathy with the argument that the reason why London-dwelling journalists or economic policy wonks get very exercised about it is because they're the sorts of people who see it happening. They're the ones who most suffer from it. If you live in a part of the country where house prices are much lower, stamp duty is just not really a thing, because most houses either face a trivial stamp duty bill or no stamp duty at all, and so they wouldn't do much if you live in a very deprived bit of back to where we were thinking about bits of the northeast coast where house prices are really low, nowhere near the stamp duty threshold. So what's your response to that sort of critique of the stamp duty critique?
So I think you're absolutely right. Obviously, it matters more in places where housing prices are higher, and it's mattered more over time because rates have gone up and it's become a bigger tax. I mean, if it was a small tax, people wouldn't care about it, and they care about it because it's a really material tax for some people. And we'll come on to how you fix it. I think what I'd highlight for now is that even if you think you want to tax people in the South East and London more, for whatever reason, why do it like this? Why not tax the profits of the businesses or the incomes of the people or the value of the houses they live in or something else? Why condition on taxing people in the South East? Why tax those people who want to move more house more frequently than those people who don't move house more frequently? That's what's really hard for me about stamp duty. So yeah, I'm not saying just give a big tax giveaway to the London and the South East. We'll come back to how what we're going to say is actually, for whatever revenue you want to raise it in a better way. This is not about giving a big tax break to London and the South East. It's just why tax people who want to move house more frequently, regardless of where they live in the country.
Okay,
so we've got our problems. Should we do the fixes and set out how we fix these two taxes? I guess I'm going to give you the spoiler up front and say that the fix is basically going to be a reformed council tax that replaces the current council tax and stamp duty. And then let's unpack that solution. So maybe first, Stuart, just sketch out what that solution looks like, big picture.
Big picture, I think the solution is more or less follows pretty directly from the problems we've identified. So we said it's strange that council tax is outdated, that it's regressive with respect to property values, that it's got this funny discount which distorts the allocation of property. And so let's have a property tax that is simply a percentage of the up-to-date value of the property. Simple, straightforward, makes sense. Stamp duty, for the reasons we've explained, just shouldn't be in the system at all. Rather than just abolishing it, what you could do is abolish it but make up the revenue by the replacement or reformed council tax being a slightly higher percentage of property value so that it replaces the revenue that we currently get from stamp duty land tax as well as the revenue we currently get from council tax.
Okay, so can we talk a bit more about that? What going from the current system to this new system might look like? Because there's a couple of things going on. One is you'd be going from it being based on 1991 values to up-to-date values, and I assume we wouldn't want to then fix those at 2025. We might want to then keep updating them so we don't have some future version of Stuart tearing their hair out on the whatever the equivalent of a podcast is in 20...
Or still Stuart in 25 years' time.
Or still Stuart in 25 years' time, to be fair. Yeah, true. I can very much imagine having this conversation in 25 years' time. So there's that updating, which means that places where house prices have gone up a lot since 1991 could see a big whacking increase in the value on which it's levied, conceivably. And also, we're talking about a proportional tax rate, which might mean, again, those people might be getting hit by both of those changes. That's a fair summary? So basically, it would create some losers, is what I'm getting at. So there'd be some people who might face much higher property tax bills as a result of the Stuart and Helen Grand Reform Act.
Yeah, so any meaningful tax reform creates winners and losers, and this is no exception, so there certainly would be losers. We can break down a bit who those are. So when you revalue properties, bring the valuations up to date, that benefits those who live in properties that have risen by less than average, and you lose if properties have risen by more than average. When you make the tax less regressive or make it proportional to value, that simply benefits those who live in lower value or lower band properties and hits those who live in higher value, higher band properties. Now, in England, it so happens that London and the South East are both areas where property values are highest and areas where they've risen most. And so those places coincide. But that doesn't necessarily have to be true. And the pattern varies a bit across the different nations of the UK. The other thing I'd add is that you talked about it in terms of redistributing across the country. This is where it gets a little bit more complicated because you have to bring in the local government finance system.
I was hoping we could park that for as long as possible, but yeah. Explain what you're getting at, Stuart.
So councils get some of their revenue from council tax, but they actually get a big chunk of it as grants from central government. And the effect of reforming council tax would depend on whether central government also changed the grants it gave to different councils across the country in response to that. Essentially, whether it redistributed grants to say that we now recognise that there are lots of very valuable properties in London and the South East, so we don't need to give those councils as much grant, and we're going to give councils in the north of England more grants instead. So if it did that redistribution of grant might mean that council tax bills had to go up a lot in London and the South East to carry on paying for services when they're getting less grant, and bills would go down elsewhere in the country where grants have gone up and councils don't need to raise as much from council tax anymore. But it will be possible to make these reforms to council tax and for the government not to change the grant it gives to different councils at all. And if you did that, average bills across the country might not change at all. All that would change is within each council area, those properties that are more valuable or that have risen in value more than average relative to others within that council would lose, and those that have risen in value less than average in that council or are worth less than others in that area would see their bills go down. So it would redistribute within areas, but not necessarily between areas, unless the government redistributed grants across local councils as well.
Okay, so just to repeat that back in what I've understood from that, this could result in a lower set of bills in the north of England and a higher set of council tax bills in the south of England, but only if the government simultaneously rejigs the grant system to reflect its council tax reforms. If it left the grants completely unchanged, every council would still want to raise exactly the same amount, and all you'd end up doing is raising different amounts from different houses within each council area. It wouldn't actually redistribute from north to south or east to west or whatever else. So you have to think about these two things together, and there's different ways of going about it depending on whether you want to lower bills in one part of the country versus another. Is that getting at the gist of this?
Yeah, that's exactly right. And you can think, it might actually make sense for the government to adjust the grant system because it would just be rightly recognising that councils in London and the South East probably can raise more of their own revenue in council tax than we've assumed in the past because properties there are more valuable, households there are better off, and so maybe they should be expected to pay more than people elsewhere in the country where property values haven't gone up as much and they haven't benefited from that. And so I think it might make sense to redistribute grant, and certainly Wales is currently planning to do a council tax revaluation reform, and they are planning to redistribute grant like that, but you don't have to.
And we probably move on in a minute, but I think one thing we should mention, Stuart, is that the government would also have a choice about how to transition to this new end state. So you could just do big bang, you revalue overnight, and you just send people new bills that could be thousands of pounds higher, or you could transition in such a way that people more gradually move towards higher bills.
Yeah, and I think there are a couple of different issues that are worth separating out there. One is just the pure transition effects. So some properties would see big rises in bills, some would see big falls in bills, and rather than just facing people with that huge change in bills overnight, you could say that, for example, no one can face a bill that goes up by more than X% or more than X pounds from one year to the next. So if you're facing a big increase in a bill, it's phased in over several years. A slightly different concern is one we alluded to earlier on, what to do about people who are in very valuable properties but don't actually have much cash to pay the tax with. And that's not necessarily just about reform, that's a feature of the current system. And actually the reforms we're talking about will make that less of a problem, because there are lots of people at the moment who are not very well off, living in not very valuable homes, but still facing chunky council tax bills that, frankly, they shouldn't be having to pay. And so the reforms we're talking about would make this problem less bad, but there would still be some people, and some new people who weren't in this position before, who have to pay a big council tax bill, but don't necessarily have income or cash sitting in the bank account to pay for it. Now, if they own a valuable property and they don't have a mortgage that means they genuinely are wealthy, then it is perfectly reasonable to say that they are well off and they should be paying this tax, but not necessarily reasonable to expect them to find the cash immediately. And so one way to deal with that would be to allow people, or perhaps people in certain circumstances, to defer paying the bill, essentially give them a loan from the government of their council tax liability, and we should charge interest on that loan. It shouldn't just be a giveaway, but allow them to defer that loan perhaps until they sell the property or until they die, or you could say for up to 10 years or something like that. That is one way. There are a couple of others. That's one way that you can help to deal with this issue of the so-called asset-rich, cash-poor.
So let's summarise what we've just covered. For council tax, we are proposing to revalue property values, have an up-to-date council tax that is proportional to those property values, and levy that in place of the current council tax and of stamp duty. And obviously, as Ben highlighted, there would be big winners and losers from any such reform, but there are lots of ways the government could transition towards that, and it could operate the system in such a way that for those who are kind of asset-rich, cash-poor, they could smooth out their tax bills over time. Before we go on to talk about landlords, I want to mention quickly in passing business rates. We focus very much on homes, houses, the things that we all live in, as opposed to the non-residential business properties. And it's worth drawing out that they are different in an important way. So briefly, it is still the case that we want to tax the land underneath a business property. So think of an office, a warehouse, a factory. It still sits on valuable land. Taxing land is still an economically efficient thing to do because it can't move. But there's a key difference between a business property and a home, and that's that the business property is an input into production, and we don't want to tax that because doing so discourages production and investment. So unlike with council tax, where a home is kind of a form of consumption, if you think you're going to tax fridges and dresses, let's tax housing too, that's not the case of businesses. So the problem with business rates is that it is partly a tax on business inputs, and the fix there is to get rid of business rates and have a land value tax on business property. So that's what we would do there, and it's different to the housing case. Okay. So hopefully so far so good. Now let's talk about landlords and the differences between landlords and owner-occupiers, which, Stuart, brings a much wider set of taxes into play.
Yeah, so housing is, as you said at the start, an investment as well as a consumption good. So easiest to think in terms of rental property. A landlord buys a property, they're investing in it, they get rental income, and they might make a capital gain if the property rises in value from when they buy it to when they sell it. And we should tax that like we would want to tax other investments, and we discussed how to do that in the last episode of this podcast. And broadly speaking, we said, well, let's tax the returns to that investment in full, but then let's also give proper deductions for the cost of making that investment. So we can allow landlords to make the kind of safe rate of return that they could get if they just put the money in the bank or something, tax-free, and only tax what they make in return for that. We should also deduct any other costs that they have, and one particular one of note here is mortgage interest payments.
And perhaps it's worth at this point drawing out the distinction, one distinction at least, between landlords and owner-occupiers. So I own my home, I have a mortgage. I don't get to deduct any of my mortgage costs, and I shouldn't get to deduct any of my mortgage costs because I'm also not getting taxed on any, what an economist would call imputed rental income. The equivalent of income from the asset that I've purchased, I'm not getting taxed on. So I'm getting no deductions and no tax. Whereas a landlord is getting taxed on the income that comes from the house, the rental income, but is only getting partial deductions through mortgage interest, and that's a key difference.
Okay, can we step back just a little bit here, because I think this is slightly tougher. Maybe listeners are thinking the whole thing's been tough, but I think this is tougher. So when we talk about, let's put the owner-occupiers and their imputed rents to one side for a moment. Let's think just about the landlords. So what you're saying is, landlord owns a flat and they are getting, I don't know, let's call it £2,000 a month in rent on that property. But you're saying they should be able to deduct things like, if they fix a boiler, that's a cost of investing in the property. Do they get to deduct that? Also, there's the mortgage interest they're paying on what they used to buy the property with. You say they should be able to deduct that. And then after all, you've knocked all that off the income, they pay tax on what remains. That's the gist of what you're suggesting we should be doing?
So landlords do, broadly speaking, get to deduct the costs of maintenance and things like that. They should get to deduct mortgage interest payments, which they only partially do now. But they should also get to deduct a certain risk-free rate of return from their original investment. So if I bought a property for £100,000 and if the relevant interest rate we think is applicable is, say, 5%, then they should... There's more than one way to do this, but you could allow them to deduct £5,000 a year from their rental income and any capital gain they get, and only tax them in excess of that.
But at that point, you could tax that at the same rate we tax other forms of income.
At that point, you could tax the returns in excess of that at probably a higher rate than we do at the moment.
Yeah, it's an example of how we undertax and overtax things. So we are undertaxing landlords to the extent that they're getting big returns from their housing. We are undertaxing that relative to labour income, for example, but we are overtaxing it to the extent that actually, I put my £100,000 in the... I wish I had £100,000. I put my £100,000 in the bank, my hypothetical one. Stuart shoved his in property. I don't get my returns taxed. He does. We're overtaxing that kind of normal interest rates. We are getting it wrong in kind of two dimensions.
And just to add, another way that you could implement the same kind of thing is just to tax the rental income in full. But when landlords make a capital gain on their property, when they sell it, you should tax them not on the sale price minus the purchase price, but the sale price minus the purchase price stepped up with an interest rate. So you only tax them on capital gains in excess of making a safe rate of return on their investment.
Okay, so there's several ways to get there. Can you... People might be listening to this thinking, like, I don't care about landlords. I've had bad landlords, and I've had landlords who I've sort of... I'd use the word detested, and I don't really care. But this matters for renters as well, right, is the point that you often try to make. We can't think about these things in isolation.
Yeah, I'm reluctant to characterise landlords as a whole as an evil bunch of people.
Some of mine have been. Let's just think about those.
But in any case, it is worth bearing in mind that when you tax landlords more heavily, what you'll typically find is that part of that gets passed on to tenants because landlords put up the rents they charge. And for that matter, some landlords basically leave the sector, decide it's not worth being a landlord anymore because it's too heavily taxed. That means that there are going to be fewer properties out there available to rent, so they're going to be scarcer, and the renters are going to bid up the price, bid up the rents that landlords can charge on that property. So renters feel at least part of the effects of taxing landlords heavily, as well as the landlords themselves.
There is a complicating factor here, though, that individual landlords who maybe have an extra second house that they rent out, they're getting penalised by the tax system at present. Something I've just noticed just being a renter in London is that the sector is moving more towards companies owning lots of houses, presumably partly for tax reasons.
Yeah, I think we have seen an increase in the number of rental properties being rented out through companies rather than directly by individual landlords. And one reason for that is, for example, that companies, and companies in general, but including companies that rent out properties, do get to deduct interest payments on their loans, whereas for individual landlords, that right has been restricted. So it's not always a no-brainer. There are lots of complicated tax issues there, but the tax treatment is one reason why more properties are being rented out through companies now.
Okay, now let's bring back those owner-occupiers, because Helen used a word where if we'd installed that bell that I wanted, I'd have been ringing it aggressively. So let's go back. So let's go back to that flat that you own, Stuart, somewhere where there's £2,000 a month coming in rent. And then let's say Helen lives in a house and she owns it. And if she was renting it, it would cost about £2,000 in rent. The point is that Helen's being treated more kindly than because she owns the £2,000 a month flat, than if she was the landlord renting out the £2,000 a month flat. That's the point, I think.
Yep.
And it's being treated more kindly because she doesn't get taxed on her consumption of housing in the way that the landlord gets taxed on the rental income. Is that the gist of what we're trying to say?
Yeah, so you can think
here?
of it as that when I own my own home, I'm kind of two things at the same time. I am the person that owns the house, so I'm the person that owns the asset. And in that sense, you can think of me as equivalent to a landlord in the sense that I've put some money into a property, that property is generating a return, and in principle, I could be taxed on that. If you're a landlord, it's an explicit financial return, pounds are passing hands. In the case of an owner-occupier, it's not so explicit because I'm also the owner and I'm not charging myself rent. But you can imagine conceptually, I, Helen the owner, could charge me, Helen the occupier, rent to stay in that house. There is an equivalent kind of flow happening on the on that side. But just because I'm the same person, obviously, I'm the owner and I'm the occupier, then the tax system doesn't treat me differently.
I think this is why people think economists are weird. The idea of Helen waking up one morning and sending herself money to say, thank you very much for letting me live in your house, Helen.
But the important thing being that not just that economists are crazy, is that the tax system is therefore incentivizing, encouraging, preferentially treating people to be owner-occupiers relative to people who are renting properties. And actually, there is a whole laundry list, a whole shopping list of ways in which the tax system favours owner-occupiers, mean they put lower taxes on owner-occupiers than on renters. I'm sure Stuart can give us the shopping list quickly. But the point being that there is a big bias in the system towards being an owner-occupier. So if you are an owner-occupier, kind of great. But lots of people aren't owner-occupiers, they're renters, and it's not good for the renters.
I think we should step back and go to the big picture in a moment, but just before. So on this point of landlords versus owner-occupiers, is there anything we need to change for how we tax owner-occupiers, or is this just fix how you tax landlords and then the system will look better as a coherent whole? Is that the gist here?
Ideally, in the long run, I would want to do the same for owner-occupiers, as we've said to do for landlords. So do tax them on that imputed rent that you can imagine them paying themselves, if you like, the benefit, the stream of benefits they get from living in the property, and do tax them on their capital gains, but only in excess of a normal risk-free rate of return that they could expect to get if they put their money into some other asset. But while I think that would be an ideal long-run ambition, it's clearly much harder to do that for owner-occupiers than to do it for landlords. And I think at the very least, let's do it for landlords first, get a system that's working and that everyone's familiar with, and deal with all of the other things we've been talking about in terms of stamp duty and council tax and all the rest of it. And then we can start thinking about, is there something we'd want to do differently with owner-occupiers?
Okay. I think we should now zoom out and make the pitch. Make the case that this is tricky, this is politically challenging because it creates losers as well as winners, but that it's worthwhile So, Helen, why don't you try and give me your hardest sell on why the government should go down, property tax reform, if this is indeed the worst bit of the system?
Yeah. Okay, so different ways into this. Let's try one of them. I mean, look, stepping back, one of the things that this government wants to do in particular is build more homes. And I think lots of us know, I mean, we care about our homes, right? They're the places where we live. We want nice homes with enough space, in nice places. And there is kind of a housing shortage in the sense that people want more housing than they currently have. And the government therefore wants to build more homes. However many of their homes they build, realistically, however they pull that off, we're still going to be making a small increment compared to the stock of housing. So we should be thinking also about what we do with the current stock of housing, how we allocate them across different people. So one problem with our current system is that we are not making the best use of our current stock of housing. And that's not me saying the government should be telling you, Ben, to go and live here and you, Stuart, to go and live here. That's nothing to do with that. It's about saying there are people who would otherwise move houses and be happier, and the government is gumming that up. So one part of the problem is just that housing really matters. Our homes are really important, and making better use of the stock of housing we already have would be a big win, not just for economic growth, but actually just for the happiness of people in the country. I think it's one element of it. The other thing is just that when you take a step back, the system is just really horribly unfair, right? There are just lots of the parts of the system where we always point to the losers. You would get losers in the reform. What about the people who are losing from the current system, the people who are paying much higher tax bills than you can reasonably justify, not for any good reason, but because we couldn't be bothered to update property values or make it a sensible system? I think we should focus more on the people who are losing in the current system and ask politicians, why do you think those people who are currently losing, why is that okay? I think if you frame it like that, it becomes easier to start having a conversation about let's stop those people being losers and think about how to do it in a fairer way. How's that? Is that compelling?
Well, I think it's compelling, but I already work at the IFS and I've been exposed to you guys for years, so I hope it's compelling to our listeners. I mean, I think that the growth angle is an important one, but I think what's tricky is this stuff's hard to quantify, right? I think we can say we'd expect this to be broadly positive for growth. It's not the only thing we care about. We talked earlier about, families not having enough space. Maybe people could have the number of children they actually desire. That itself would be a good thing. But if you're thinking about growth, hard to put a number on it. And if you're a government that cares a lot about the numbers and cares a lot in particular about, getting it built into the forecast, it's really tricky. And I think that, we can get into this in a whole separate podcast episode, but the fact that we need to be able to quantify these things sometimes might stop us from doing good, sensible stuff where we think it's going to be good, but we don't know how good. So let's give it a go and see what happens. And I think that's a shame.
Okay, so maybe that's a good time to sum things up. Obviously, I agree, Ben, it would be great to put numbers on these things, but I think we also shouldn't over-calibrate that. There are some things that we can be confident enough are good that we should find the political will to do them anyway. Okay, we've chewed through a lot today. Big picture, I started by saying that homes are kind of different to other things. They have multiple features. They are the things we live in, they are investments, and they sit on valuable land. We want to be taxing all of those things to some degree. We talked about how council tax and stamp duty have big problems at the moment, and the big picture fix is to have a sensible council tax, one that is based on up-to-date property values, not values from decades ago, and that is proportional to those values, not regressive. If we had such a system, that could replace both the current council tax and current stamp duty. That would be a system that was fairer and better for growth. On the businesses side, on non-residential property, we're proposing to have a land value tax in place of current business rates. That would also be better for growth. And with landlords, there's a big complex system there. I think one takeaway is that we have a bias towards owner-occupation that is bigger than I think you could reasonably justify, and done in a particularly hodgepodge kind of way. So even if you want to have a bias towards owner-occupation over renting, it's not clear. In fact, I think it is clear that you don't want to do it in the current set of ways we do it. So we should be thinking about all the different ways in which we tax the incomes from landlords and doing that more sensibly. But on that, let me say thank you to Stuart and to Ben. Thank you to all of you listening. If you've enjoyed this episode, please do tell your friends and share it. And if you'd like to become a member, you can do so for as little as £10 a month. We look forward to seeing you next time for more Tax Talk. Thank you.